Hi everyone, this is Kel and this is my 899 video. Wow, this is amazing. I mean, since we started this channel for 3 years, this is really a long journey. Now, some of you may have realized that recently I wasn't feeling very well and I have a massive headache and even go to the doctor, it doesn't really help. But I'm doing this on course with all the strong medication, painkiller. So that's why this video is going to be very important. I want you to watch it because I'm going to show you how to use the all-time high method that I have created. And I think it's very useful and you can make some money out of this. Because now Federal Reserve has chose not to cut interest rates. This is not a good sign because if they cut, that would basically slow down the costing of everyone. By not doing that itself, right, it's just basically because they want to curb inflation, which is something that I've been saying and stressing. So the question is if they don't cut interest rate, well, Wall Street wants it now. The question is, will the selling wave continue? And in my opinion, it will. So let me tell you more in great detail. Let's go. Now, before that as well, thank you, Ames, for the kind sponsorship and disclaimer apply as usual. Now, first of all, right, let's talk about the Nikkei first. Now, Nikkei has been going up quite a fair bit, right? Now, ever since the Warren Buffett and friends, which is the late Charlie Munger, they went in to buy a lot of the Japan broking company around here. That time the Nikkei was trading at 27,000. I was just telling my friends that it will likely see 30,000. That's about another 10% upside. And incredibly, from last year itself, the first few months, the Nikkei really touched the 30,000 pretty easily. And I was kind of amazed by that. And honestly, when it hit about 33,000, I feel that this is a little bit too high because we all know that the dollar yen itself may not be going up anymore. And we know that the Japan itself, they have a very high what they call silver hair generation. So that's the reason why I was not optimistic of Nikkei. In fact, itself, I was expecting Nikkei to fall, and then it happened. It came down nearly to 30,000, and for some reason that did a double bottom, and that was where in November a huge amount of funds going into the market, and from then itself, the Nikkei just shoot all the way up to the high of 37,000. Oh my goodness, that's incredible, right? So what's the main reason? Is it because the people getting rich or the people just start to buy their own shares? No. You see, end of the day, it's always a liquidity game. The market cannot go any higher or any lower if there's liquidity or there's lack of liquidity. So the thing is this right now, you can see that from this Bank of America, you can see that's why the private clients bought in Japan, emerging market debts, the REITs, and so forth. Look at it, the amount of money that's invested in Japan is insane. That's the reason why. So you can see why the rich get richer because they know where to go, of course, under the guidance of their fund managers. So you don't need to see this. You're probably going to see the Japan ETF next year, whereby when the big clients want to get out of the market, then this so-called these financial institutions will come in and say, okay, let's buy this right now because Japan is doing good and stuff, and you go in to buy as a retailer, get caught as always. All right, it's always happened. So if you look at it right now from here, this is another thing to watch out for, the largest weekly inflows to the emerging markets again. So what is emerging markets? All right, let me explain this to you. The 10 big emerging markets, okay, according to alphabetical order: Argentina, Brazil, China, India, Indonesia, Mexico, Poland, South Africa, South Korea, and Turkey. So in case you don't ask me, so how about Singapore? Well, Singapore is considered a high-income country, hence, therefore, right, we have graduated from emerging markets, okay? So that's different there. So if you want to feel like buying into some investment overseas, then these are the 10 markets you consider. So of course, I did some search for you. Well, one thing is that South Korea, seemingly not too bad. They have been doing quite well, holding nicely at about 22, 25 back in November, the same time period whereby the Japan market go out, right? So that means that the funds basically came in. You can see that a huge amount of funds that came in, although it pulls back, but yet at the end of the day, it went for a new high. So to me, itself, South Korea can go up to 25.80 again in the near term, okay? But compare this with Singapore, then you see a difference there. Singapore, November period, we did have a little bit of upside because of the US market, but very fast, the profit was all evaporated. Then after that, there was a little bounce during the Christmas period, and then again, this market has set up. So if you compare to South Korea, we are not anywhere near in the momentum. And in fact, it's all right. I'm actually quite optimistic in Singapore last year. But now the thing is this, from what we're seeing right now, I think that we may have to go down a little bit. To me, that Singapore stock market has to go down to about 29.50, probably then we can see some form of support. That's my personal opinion. So you compare this again with India, this is amazing. India has just hit record high, all right, and you can see that they're doing well. So that's why funds, the money plays a big part in anything, all right? So let's go back to Jerome Powell and friends. Now, Jerome Powell says that a March rate cut is not likely, all right? He don't think so. He feels that, right, this is not appropriate for it to be happening. And because of that itself, the Dow Jones lost 300 points and Nasdaq dropped 2%, all right, because of that. Remember, I said this many times before, it's time to take profit from the Nasdaq. And of course, some people will write in my comment box and say that, if they call for sell, they will call for buy and vice versa. To me, doesn't matter. End of the day, my job is to give you my view. You do your own research, because now it is very important that the central bank does this. And although they did say they don't want to cut, but then again, they did remove the part of statement that signaled the central bank is doing a tightening basis. They're not doing anything. So in fact itself, they removed the phrase that referred to additional policy firming. This is taken out. Hence, therefore, there's a little bit towards the dovish side among the hawkish side, all right? So, and the interesting thing is that the treasury yield actually seesaw with the benchmark yield at last about 3.9. Now, this is interesting because with there's no rate cut, that means that by right itself, the yield should go higher, right? But yet, the yield came off. So this is kind of interesting. So if you look at it, right, actually the market is pricing 6 rate cuts for this year, as you can see, all right? So the question is this right now, we're now shifting away from the March one. What do you think? So the thing is the market still believes that maybe as we go to March, there'll be another change of heart, Well, it is possible. If the economy is not doing well, then there is a very high chance that we could see a interest rate cut. So Jerome Powell said most likely will not have, but it doesn't mean that affirmatively that it will not happen. So because of that, we need to watch out closely. Now, Jeffrey Gundlach was interviewed after the meeting, and he says that to CNBC that all the Goldilocks talk make him very nervous, and in fact, thinks recession is still likely. So Jeffrey Gundlach is the guy who basically have the double line hedge fund. Now he says that right now all the Goldilocks theory about things is good and is fine. It's not very welcoming for him. As a matter of fact, he feels that the stall in inflation is coming down, and in fact, he says that he expects recession continue to hit in 2024. He suggests that maybe investors should raise some cash to fund buying opportunity when the economic downturn arrives, which I totally agree with him. So the thing is this, he says that if the US do go into recession, I think that it'll be a buying opportunity and you want to cash for that. And I totally agree. So that's the reason why I say that, guys, take profit off the table right now. Let it go down a little bit. Let the market slide by 5 to 10%. Then buy in again, because that will be a lovely time. Because undeniable, when the interest rate falls, it does give a little bit room for the stock market to go higher, as usually that happen. Hence, therefore, right, you need to have come cash. If you buy right now and you get caught at a high, then in the market falls, you can't buy it cheap, then you need to wait for some time for the market to recover. And even if recover, you may not be getting any profit. So selling it right now will give you the bullets for you to buy at a cheaper price. What do you think? Let me know in the comment box. Now, because what you can see right now, the University of Michigan Consumer Sentiment and the Shiller PE ratio, we are actually at a pretty high level. Now, that means that by right, it's not a good time to really buy into the market. So you can see right now, right, we are all at a high level. And every time when this happens, the stock market do pull back later. So that's one reason why we shouldn't be chasing here. If you compare this right now, you can see that the consumer sentiment and the PE ratio, they really move in accordance. And of course, if let's say now that the current PE is really too high, then likelihood is that we may need to see it dropping down, all right, to meet up with the consumer sentiment. Because every time it's out, they do have a tendency to come down to the same point. So that means that if you look at it, that means you look at the PE ratio to go to 20. Hence, therefore, the market may have to drop by at least 10% from where are we right now. So 10% drop is quite a bit, but I think it's healthy. It's not a lot, because now it's at 37,500. 10% drop, about 3,000 to 4,000 points. That will give us approximately 33,000. Why not? This will be a very good deal to buy some stocks at that point. Do you think so? Ahead of the presidential election. Now, the consumer sentiment prime PE ratio, you can see every time when this happened, when it hit the low end since 1975, 1981, 2008, we have the oil shock, unemployment hitting more than 10%, housing crash. So therefore, right, in this full pictorial, it seems that right, we should have a recession, and it should be happening in about 3 to 5 months' time. And because of that, right, the home buying condition is now at a real low level, which is lower than what happened back in the 1970s, 1980s. Hence, therefore, right, it really tells you that maybe it's time to take some profit off the table. And because of that, the industrial production year on year has also slipped below the zero mark. Now, there's only 2 times whereby it didn't hit. When it went zero and there was no recession, that was back in 2015. And now, to me, it's all right. This entire recession thing should have happened, but because the stock market is still buoyant, the sentiment is still kind of okay. Hence, therefore, it's not able to reach this so-called official recession mode. But with all the high prices now, with stock price at the high, and of course, economic numbers are not performing, I believe that it's just a matter of time whereby they'll announce it. So if you look at it right now, right, the percentage of state with 3-month average of unemployment rate that's more than 0.5% above the 12-month low. We are now here, which is now at the high level. They call it the sham rule, right? So then we are now at 31 level. So the thing is this, if you look back again and again, this is something proven that every time when this happened, but especially in 31, we have a recession. No, it cannot change the fact that we will be seeing recession, okay, in approximately, the official one, of course, 3 to 4 months time. So if you look at it right now to this February, so 3 to 4 months time, May to June period. Now, of course, you may say, but Kel, isn't that impossible because we have the election coming in? Well, guys, it can be a short one. We saw a very short recession back in 2020, and it could be a technical recession. The boys will tell, okay, let's sell something first now at a cheaper price, let's buy ahead of election. Who knows? This may all happen. And now there's a chance that there's a very high possibility that Donald Trump may actually win. So probably they're going to tell us that it look like it could be the repeat of 2016 again. And then after that, the stock market may fall initially, then buy up all the way. Now, this is what I personally speculate. So that's the reason why 4 days to 5 days ago, when the NASDAQ hit about 17,500, I immediately tell people that I think that the NASDAQ is time to get out. I inform people that it's time to take profit. And of course, people who followed through, they have benefited. For those people who purposely went against me, congratulations to you. I hope you make some money out of it. If not itself, right, maybe you can use my sharing as a second reference, all right? I cannot be 100% right. I know that sometimes I'm wrong, but at least let's just be cordial here and be objective. End of the day, if you just purposely go against me, I mean, it's really very silly. Don't you think so? So that's the reason why I've been calling for Tesla to be down. I told you guys Tesla will come down to about 180, which is really came down. And I told you a rebound to 195. It really happened. And I said that next time around, it'll come back to 174 again. And it seems that it may really happen. Now, what's the reason for Tesla's slide? It's because the judge void the Elon Musk $56 billion compensation. Because of that itself, you feel that this is really not incorrect for this Elon to get that. Hence, therefore, they rule it against him. At the same time, we saw that Alphabet share slide. Oh my goodness, from 152 closing to be trading 140, more than 7% drop. Okay, and I have told you guys, I suspect that yesterday in the video, I said that likelihood we may see this this Alphabet, right, which is Google, may not do well. Remember, check my video out, and I told you that likely the earnings won't be good. And again, I'm spot on for that. And of course, one thing is a stunner, is a Microsoft earning. They seem to be good earnings, but again, due to, I think, too high, the market cannot stay above 410, and there's some profit taking last night, down by $11 or 2.69%. So it could be a sell on the news event, but nonetheless, when the boys want to sell, they will sell regardless. So that's the reason why I've been telling you this. I'm not very comfortable with the Dow Jones right now, because mathematically, the last 15 days or so, right, the mathematics shows that there's weakness in the market. But of course, the boys have been buying relentlessly, and of course, the momentum is very bullish. So that's the reason why it's holding the market right now. But once if my KSI indicator turns red or my KCX turns blue, and if this guy stays R, then the selling will kick in. All right. So hopefully you get to see this from in the future. Yeah. Okay. So now I want to share you this thing called the all-time high indicator as a gift to you guys for my 899 video. Now, it's not easy to do so many videos over the last 3 years, and periodically I try to do as much as I can, and these 2 weeks I've been doing a lot. So all is because I want to leave something for you so that you can benefit from it. All right, let's go into this all-time high indicator to wrap up for this video. Now, first of all, it's all right. You must understand how it works. Okay, so my way of understanding this is that every time when the market hit at all-time high level, I will do a 5% retracement marker. And it seems that for the last few times since 2021, Every time when the market hit the new high, the market do come down to the 5% mark rather easily. Now, occasionally you go to 90%, 85%, and so forth. Now, we all know that 80% is a recessional number, which might, if the market do break from the all-time high, goes down to below 80%, usually it's a point of a recession. But of course, what happened in September 2022, the market did not really go down for too long. Within less than a month, it stays up above the 20%, and then the market went all the way up south. So that's why our students who follow this methodology will know that when can they take a positioning. And of course, the accuracy is incredible. Like this, what happened over here, the market from 100% dropped to 80%, rebounded all to 95%. When it came back down, stopped perfectly at 85, and then go back up again. So you can see that the accuracy is there, not till the point of the exact numbers, but roughly you know what will happen. Okay, so now what's happening right now, we have two waves of the new high. So the thing is this, I took the liberty to give you the previous high and the 95% mark. So in short itself, in mathematics, okay, it's just going to simply put the current price right now is trading at 38,224, right? This is the Dow Jones at the moment right now. Hence, therefore, if the market do pull back, it will come down to about 37,871 for the first support. Now, if the market can stay above 37,870, likelihood it'll rebound and go for a new high. But if the market fails to stay above 37,870, then the next level it may go, which is like I likely think so happen, was 36,670 region. Now, of course, with the current price here, if the market do falls to around this area here, there's a lot of money to make, about nearly 1,600 points to make. Now, I'm talking about one contract itself is $1,600. So I think that you can take a try on this. Another thing that I want to tell you is the interesting pattern here. Now, take a look here. This is called the BNB for the TWB system, which means that the high and the low basically exceeded the previous day, the BNB structure. Now, of course, this is my own creation. And you can see that the last time we saw this, a BNB, the market fell a little bit. And the last time we had this, the market rebounded, but this is not the all-time high. So if you stretch back a little bit to the past, you will notice that most of the time when the market hit all-time high, all right, and then after that, what happened? There's a BNB momentum. I mean, the market basically has this momentum itself and the market sell. So this is what happened back in 2022 in January. And of course, if I clear the screen a little bit more and move back to for you again, we have another movement somewhere. Let me show it to you now. Yep, somewhere around here, that was in 2010 when the market sold down rather badly during the COVID period. So the thing is this, when you have a BNB black candlestick engulfing it itself, it's not a good sign. But of course, same thing again, 37,870 has to hold. If it fails, then the downside is kind of confirmed. All right, guys, I hope you like my video. Thank you so much for all the support. Please like, subscribe, and share my video. I'll see you at the final video, the 900 probably tomorrow. This is Kel signing off. Take care. Bye-bye.